Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Certainly equity is still pretty volatile out there, though the last couple of days we've seen a pretty reasonable bounce. And that sort of coincided with reports about company executives buying of shares currently at sort of near record levels. And certainly there's been a couple of high profile instances. You see Jamie Dimon at JP Morgan, he purchased 500,000 shares. With all the banks' shares have been sort of way oversold, and just on the last couple of days, they sort of rallied pretty strongly on the back of that. Now, it is no sort of crystal ball out there, but when you do get executives purchasing shares, it's normally a pretty good sign that they view that the share price has been certainly oversold, and certainly the sort of data and the sort of reporting that they can sort of see going through to them seems to represent a pretty good value for buying the shares, and that's maybe just given the sort of amateur investors out there, if you like. A little bit of heart and a little bit of confidence. It's maybe time to sort of dip your toe back in the market. Certainly at present, the signs are still pretty encouraging out there. You've still got a pretty reasonable growth going forward. Certainly in the US, inflation is still pretty benign. You've got low interest rates, and that should be pretty encouraging for economic growth over the next sort of 12 to 18 months. Oil's still pretty key out there, still a pretty big driver, and it's just a question of just trying to sort out this sort of supply-demand imbalance at present. Most analysts feel that it will get sorted out towards the second half of this year, and are still predicting higher oil prices by year end. Overnight, another pretty disappointing dairy auction. The prices weren't down as much as first anticipated. It was only down just over 2%. That's really just on the back of sort of oversupply coming out of the US and Europe. And certainly, New Zealand economy, apart from the sort of dairy sector, seems to be holding up reasonably well. Certainly, retail sales are still pretty robust out there, and the economy is still pushing on at a pretty reasonable rate. The major issue though is obviously inflation. That's still pretty benign, and there's still talk about potential of possible further rate cuts here in New Zealand. Now, bearing in mind the OCR is 2.5% now, to take it down much lower, it's really a question of whether that really would be beneficial. Certainly, savers will be hurt pretty badly, and if you are interested in looking at other options out there to sort of term deposits, call us on 0800 867 323. Or go to the website www.bayfinancialpartners.co.nz. Certainly there are other options out there in terms of dividend shares, property trusts, etc. Some of these are also structured a little bit tax efficiently as well under the sort of PI regime. They can still give you a pretty decent return, maybe sort of 5.5% net. On some of the property trusts, some of the high dividend shares, maybe even a little bit higher than that. So give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and especially on those income options here for New Zealand investors. We look forward to speaking to you soon.